Okay. And now we should be ready. Okay, great. Welcome everyone to today's discussion topic. This is a 3-part series. We've already done parts 1 and 2 on Monday and Tuesday. This is part 3, and there are only 3 ways to trade the earnings season, at least the way I trade. There are only 3 ways. I shared with you, I went over parts 1 and 2 on Monday and Tuesday. Today we'll talk about part 3. Before I start, as always, the standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only, okay? So you just have to make sure you agree to that. Let me take my webcam down so you see the whole disclaimer, okay? All right. Next is, we said there are 3 ways to trade the earnings season. The first one is through guerrilla trading, which is when you enter before companies report earnings. I just call it earnings plays or something, but it's really called guerrilla trading because it utilizes a sniper's approach of hit and run. Okay, now I do it based on this basic unit, right, that you should all be familiar with. It's how all stocks move on any and every time frame. It is especially easy to see the basic unit when you look at the larger picture, when you look at a microcycle like this one on the monthly chart, because it shows you the entire cycle. It shows you stage 1, stage 2, the uptrend, the top, which is stage 3, the sell-off, stage 4, and and then repeat again, stage 1. So this is the basic unit. It's what I base all my trading on, and based on that, I was able to come up with strategies for entering earning strategies for transition A, which is we enter right when the stock is transitioning higher. Transition B, when the stock is going a little climactic, we want to short it into earnings. Transition C, when the stock is breaking down a little bit, and then transition D, when the stock is going climactic to the downside, in which case you'd want to play it long. We also have a strategy for stage 2, the uptrend, on pullbacks or base breakouts, and then a strategy for breakdowns in stage 4 and sell setups also. So we have 6 strategies, one for each transition, one for the uptrend, one for the downtrend. This also is how I day trade, but we're going to talk about that in the next few minutes. Now we said, again, just to recap real quick, there are 3 ways to trade earnings season. One is to get into the plays before they report, into stocks before companies report. Another way is by getting into plays, into patterns after the company's report, and I do it based on the basic unit for sure. So I have a swing strategy for transition A, for the uptrend, all of that. But I also do it during earnings season. My main focus is on gaps, because that's what we get every day. We get lots of gaps. So I do it based on whether the gap is pro or novice. If it's pro, then I look to play in the direction of the gap. I just wait for a pattern to develop after the stock gap. So this was the gap that day, and then as you can see, it went sideways for a few days, giving us the breakout play. Okay, so this one gave us a pullback after a professional gap. We said the way to know whether a gap is pro or novice is by looking at 3 things, at least 3 things. First, did it gap from the 20? If it did, then you should consider it pro. If it gapped just above resistance, it should be considered pro. And then number 3 is if it went against the most recent trend. So if the most recent trend was sideways, in this case it actually was a couple green bars, but the previous day was a narrow range bar. This one was a red bar. So if it goes against the most recent trend, it's always pro. Okay, so if the trend is down prior to the gap or sideways, then it's considered pro. So 3 ways to tell whether a gap is pro or not, and you only need one of the 3. You don't need all 3, okay? If it gaps from the 20, if it gaps just above resistance, and if it goes against the most recent trend. So what I do, again, is, especially during earnings season, I let the, maybe I can day trade it on the gap day. But then I watch that gap. I don't just toss it. I save it in a spreadsheet, and then I look for a setup. The setup often comes after just 1, 2, 3, like so, after, or sometimes it comes after a base, or like for example GME right now I think is my best play, my best open play as a swing. GME. How did I find this play? GME. Played it as a breakdown right here, and then I added to it. So did it as a breakdown, and then we added just yesterday. We added as a 1, 2, 3. Not yesterday. Yeah, it was yesterday. We added again. So how did I find it? It was a gap. It was a professional gap down from the 20, from a doji bar. See it? And then we did a base breakdown as a swing trade, and then it gave us a 1, 2, 3, 4, and then we added yesterday to that play. Or was it the day before? I think it was the day before yesterday. So that's the play. If I look at all my open positions, I can. I'll show you. You'll see that half of them probably come from gaps. Even swing plays, I mean. SLDB is another one that I did an ad for. So here it is. Sell setup. How did I find this sell setup? Because I've been tracking it since the gap. After it gapped, I've been tracking it. Gave us a sell setup short. See it? That's an open position right now. If you've been, if you've been following the strategic swing trader. MGPI is an open position short. How did I find this 1, 2, 3? It was after the gap, and then a 1, 2, 3. So does that make sense? Does that make sense? So most of them come after gaps. Sometimes they don't. Like this one is not. KOD is an open position. That's just a transition C, short. That's not an open. It's not a gap. But a lot of, especially during earnings season, over 50% of all my swing plays come from gaps, like I just showed you. All right. So what I do is I look for. So after the gap, I don't get in the next day, because I need at least 2 bars to get a pattern. 1 bar is not enough. So I don't look at it the day after it gaps. I look at it the day after that. So for example, just going back to what we were talking about, Amazon gapped. I won't be looking at Amazon to get in it tomorrow, on Monday. I would only look at it on Tuesday. If if it sets up as a 1, 2, 3, and assuming I like it, then I could play it long. So the earliest I will look at Amazon would be on Tuesday, not Monday. So I always wait for a 1, 2, 3, at least a 1, 2, 3. Sometimes, like I said, on like SLDB, for example, it may take a while. So it gapped this day, next day no pattern, and then sell setup pattern. Great. Does that make sense? So it took how many days after the gap? 1, 2, 3, 4, 5, 6, 7 days. If you like the gap, and I really liked SLDB, I added to it also. It's like the GME. I have 2 positions in it. I have the initial and the add. So if you like the gap, and look what this did. It broke down under the base. The gap triggered a breakdown. So it looked gorgeous to me. And then the weekly look at the weekly. Tell me this doesn't look lower. I dare you. Tell me this doesn't look lower. It does, doesn't it?
Sorry, I missed that. Could you say it again, please?
Okay, Siri, I'm not talking to you. I mean, I don't know what's wrong with Siri. Every presentation I give, even though my phone is on mute, Siri picks it up and starts talking to me. Quit interrupting me, Siri. Otherwise, I'm gonna disable you. All right, continuing on here. So that's the idea. Is after the gap, you start stalking it for a pattern. If it's a professional gap, you want to play it in the direction of the gap. So this was a professional gap up, meaning start stalking it not for a short pattern, but for a long pattern. Does that make sense? So over here, professional gap, I stalked it long, it gave us a 1, 2, 3, 4, and then bam. Does that make sense? Same here, long, long, and this is gorgeous because it was a 1, 2, 3, and then it was right at resistance, which means as soon as it broke out, it's gonna clear resistance and then off to the races. Beautiful, beautiful. So never the day after the gap, but the day after is the earliest you can start tracking it. The day after is usually a narrow range bar. Usually. The only time, there's only one exception to this rule. The only time I look at a stock the very next day after a gap is when on the day of the gap it prints a narrow range bar. I can't think of a play right now other than the Costco that comes to mind. It's an old gap, but if you like it, this broke the long-term uptrend. I don't know where it is. Is this Costco? I guess I don't. Oh, there it is. See it? It broke the long-term. This is an old one, but it's just the only one that comes to mind. If it doesn't move on the day of the gap, then you can look at it you can look at doing it as a high-low entry on the very next day after the gap. See that? So short under that. If it doesn't move on the day of the gap and you really like it, then you don't have to wait for 1, 2, 3. Okay? You wouldn't have to wait. You could just do it like so. Short. But if on the day of the gap the stock actually did move, it wasn't a narrow range bar, then you have to wait for at least a 1, 2, 3. At least. Okay? And so that's how I swing trade gaps if they're pro. I'm not going to go over every chart. We already talked about this in part 2, I think. In part 2, which was on Tuesday. And the same to the downside. The day after the gap, no, but the day after that was a great short right here. 1, 2, 3. See it? Same here, same here. You know, I could keep going on and on and on. It's a pattern that repeats. You get the gap, the professional gap, start stalking it for an entry swing short. Okay? No, the question is, are these all short-term swings? No, not necessarily. Some end up staying for a long, long time, like long-term plays. Look at this. Look at that. How about this one? You see what I mean? How about this one? So some for just a few days, but others for a long, long time. If it's a swing, I usually go bar by bar. Once I get 2 red bars in a row in my favor, or 2 green bars if I'm playing long. If it's a long-term play, then I don't manage it bar by bar. I manage it on pivots. If it's a long-term play, it just depends on the chart pattern. The chart pattern should tell you whether it should be a long-term hold or a short-term hold, like just for a few days. Got it? So some end up being long-term plays like this one, especially when you see how it was triggering that basic unit. So when it's just at the start of the basic unit, guess what? It's probably going to go in a downtrend for months, at least for weeks, at least. When it's again triggering that basic unit, triggering the transition C breakdown. So okay, and sometimes like this one also, transition C breakdown. And sometimes it's just for a few days, All right. Now when it's a novice gap, then what I do is I look to play it long against the gap. So what's a novice gap? It's when the stock is down a lot and then gaps down a huge amount usually, and always puts in a spike in volume on the daily chart. Always. If it doesn't, it means you didn't get the flush, the capitulation, which is necessary for the stock to bottom. I mean, look at every single one of these. You're going to find that every single one of them had that huge spike in volume on the gap down. Every single one of them, right? Now, if I like them as novice, then what I start looking for is not to short, but to play long against the gap. Because I'm saying this is an exhaustion gap. So I'm looking to play against it. Tom, would you not play a daily ribby or gibby pattern as a swing entry? I would, but it would have to be the red bar or the green bar would have to be a narrow range bar. Okay, a narrow range bar. Another question is, would you say the broad indexes are not possible transition C? I'll talk about the market. I talk about the market nonstop every day. I said I don't know. I'll tell you what I said this morning, what I said the previous day and the day before that. I said I don't know that this is the top in the market, but I can almost guarantee that we're not going to continue to grind up every day like we've been in this incredible bullish market, bullish uptrend. I can tell you with almost 100% certainty, almost, that we at least have slowed down. At least, if not topped out. But it's too premature on my part to call this the top in the market, only because we're still at that awful rising 20 MA on the daily chart to the Qs. So, but we might be. I like to be objective. If I feel it's the top, I'll go ahead and call it the top. But more accurate way to say it would be, I know with 99% certainty that we at least have slowed down. We're not going to continue to move up like we've been the last 4 months. Does that make sense? That's what I do know. But do I know for sure the market topped out? I'm not too sure, no. But we'll find out probably by next week. If this week's low gets taken out on the weekly chart of the Qs, we're in a pullback. We're starting a pullback at the very least. Look, I haven't looked at the market since I came on the mic, but when the market usually is near a top, you get that run up, that acceleration. We did get the run up. You see, like here, we had a huge run up, and then the wide range bar, and then that put a short-term top. We had another big run up, and then we topped out. We have a big run up here. Is this the top? Maybe. The problem is, here we got a wide range bar. This is the monthly chart of the Qs. Here we didn't really get a wide range bar, but I don't know. And here we didn't get any wide range bars. So I just wish we got a wide range bar here, that we would have moved up one more week or so on the daily chart. One more week. And this would have been a wide range bar. But again, extended, look, this is not the time to begin buying. This is always the time to begin buying, when it's at or near the 20, but not when it's above it like this. So if anything, look for a pullback. Could this be the top? It could. It could be the top after 11 years of rallying. It could be, but it's a tough prediction unless if we had printed a wide range bar on the monthly chart of the Qs, then I would be a lot more inclined to call it the top. Again, for next week, this should be the line in the sand. If we take it out, which is this week's low, if we take it out on the weekly chart of the Qs, we almost 100% sure will be starting the pullback, basically, to the rising 20 on the weekly. Okay, the coming few days are going to be key, because if we break, whether we break above today's wide range red bar or continue lower is going to be key. It looks like we're going to start pulling back, but the reason why I'm hesitant to say that, because look, we have a rising 20. Usually you don't get a pullback, a really nice pullback, until the moving average flattens out a little bit. So we still have a rising 20. So we'll see, but it's looking like it's going to be a lower high here on the daily chart. Okay, all right. So back to the presentation. So you got it about how. So the first way to take advantage of any earnings season is by learning how to get into plays before the company reports. It's not the easiest thing. It's a little risky, of course. Some quarters are phenomenal, other quarters not as good. So you have to play the long game. You can't just pick plays the one day and expect that, okay, this is it, I'm gonna become a millionaire just overnight. Does that make sense? So you're playing the long game. Some quarters are amazing, other quarters not as good. So you get in the day before they report. The second way to take advantage of earnings gaps is by swing trading them, waiting for the gap. Looking for a pattern to form on the daily chart after the gap. If it's professional, you want to play with the gap, right? If it's professional, you want to play in the same direction as the gap. If it's novice, you want to play against it. What kind of patterns do you look for? I look for the earliest that you can look for is a 1-2-3 pattern to play short, or 1-2-3 long. That's it. And sometimes it happens after, a base, a stock, let's say gaps and bases, or it happens after a pullback. So you just have to look for a pattern. One of the few patterns that we have, right? There aren't that many patterns that charts that stocks give us that have high probability and that repeat. Because if you think about it, prices correct stocks correct either through price by going side by pulling back, or through time by going sideways. That's it. Through price or time. So breakouts or pullbacks, those are the only two patterns that really exist. Everything else is a variation, is a subset. So does that make sense? So 1-2-3 long, 1-2-3 after a big mega gap down, long, 1-2-3. Look at that. Look at the moves. Impressive, really impressive. Look at that. This was a breakout, a climactic, but down a lot and then gap down, wide range. Most of the gaps that I play long against the gap are usually large. This wasn't very large, but the stock reached capitulation. Look at the size of the volume bar. That signifies that the last batch of sellers that want out are already out. Okay, it signifies the capitulation, the panic selling. Same here. Stock was down a lot, right, from 24, and 2 weeks later was at 13. Okay, so same here. This is Tesla. This is actually Tesla. Gap down to 180 to support, and then that was it. And it bottomed, and now today it's at 640, I think. Amazing. Here, you see what I mean? This one, I wasn't too sure whether to consider this pro or novice, so I could have played it short right here after the gap. Has a beautiful breakdown right here, but I didn't. I hesitated and I didn't do it. And here I played it long. Beautiful. Okay. Okay. So questions: how come we haven't had any panic selling in the market today? I'm not sure. I'll have to look at the market. We'll have to look at these charts later on. I don't want to keep switching back and forth between live charts and the slides. So we'll take a look at these. But if you have questions about what I'm presenting right now, feel free. Okay. So again, one more time, either get in before stocks report or get in after the report on a daily pattern. Okay? Then here's the third way to take advantage of any earnings season. Here's the third way. By day trading them the day of, when they report earnings, on the day of earnings, the day they gap. So by day trading them, that's the third way. I can't think of any other way to take advantage of earnings season, of gaps, either before they report, after they report as a swing trade, or the day they report as a day trade. Now, there are 7,598 ways. I counted them. There are 7,598 ways to lose money day trading. Okay? Here's my absolute best advice on how not to do it. How not to lose. It's true. My absolute best advice. Does anybody know what it is? Give me your best advice. If you're watching this on social media, feel free to comment below. Tell me what's your best advice on how not to do it. Don't trade. Well, please don't, for all the trolls out there, don't be a troll. I'm being serious here. If you have something important to say it. If not, don't say it, please. Okay? I'm not really joking here. Have a plan. That's pretty good advice. Don't add to losers. Have rules and obey them. That's pretty good. Join this room. Well, thanks, Raj. I appreciate it. That's very kind of you. Sit on hands when not sure. Sit on hands. If you're standing, then just, I don't know. Just put your hands behind your back or something. Sit on hands when you're not sure. Don't trade. Yeah, we said that's not a valid option because we are traders. Educate yourself. Get some education. Okay. Great stuff. Don't revenge trade. Wonderful. Cut your losses quickly and let your winners run. You might not know how to let your winners run, like you don't know how to manage. That's fine, but I guarantee you, you know how to cut your losses short. Okay, because all you need to do is get out when the stock starts to go against you. Got it? Figure out the stop, and then just put your stop in the system and let it stop out. Don't cancel your order. Okay? So at least if you don't know how to manage and stick with the winners, at least you should be able to cut the losses short. And I'm just reading from the answers from the room here, from the VTF strategic day trader room. Always use a stop loss. Great. Take only the best plays. Guys, you should be right here with me. Don't oversize. Perfect. Switch fear and hope. That's wonderful. I think you might have gotten that from me, and I got it from Jesse Livermore, who said we have to reverse what you might call his natural instincts. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear that his loss may develop into a big loss, and hope that his profit may become a big profit. So that's Jesse Livermore. That's exactly right. But in order to reverse your natural instincts, you have to start paying attention to your psychology, to your stream of thoughts, to your emotions. So you have to cultivate some awareness. You can't just reverse your natural instincts of hope and fear. Fear kicks in when stock starts to go in our favor, and we start to develop fear of giving back the profit. So we get out too soon, right? And then hope is when the stock starts to go against us, and we say, oh my God, please let it go back in my favor. Let it go back up. You start developing hope, and you stick with the play, and it keeps going against you, of course. So he said you have to reverse it. But how do you reverse it? We're not robots. You don't just press a button and you reverse your natural instincts, what you were born with. No, you reverse it, so to speak, by just cultivating some awareness, by paying attention to your emotions, and seeing whether you're getting out only because you're afraid, and not because the play is, let's say, a target or at resistance. Maybe you're getting out because you're afraid of giving back profit. So if you can cultivate some inner awareness, then you can catch yourself, say, getting out, really there's no reason to get out here. It's just because I'm trying to satisfy that emotion. And then the same when the stock goes against you, if you start hoping, then if you notice that you're hoping, then you know you're in trouble. You're not really looking at the chart and reading the message correctly, objectively. You're actually now letting your emotions interfere with your trading. So you have to kind of pay attention a little bit, and if you do, and it's a skill, it gets better and better over time. It's not like, next day you're enlightened. Now you know exactly what's going on 24/7 on the inside. No, you do it initially by taking a walk and just paying attention to your stream of thoughts, and just be silent about it. Next day you do it again while sitting down and eating your lunch, and maybe looking out the window, whatever. People meditate, right? But then you will be able to do it while trading. See what I mean? Be able to do it while trading, which is wonderful. All right. So good stuff. I appreciate you guys sharing your best advice on how not to lose. Here's mine. I want to share it. I'm happy to share it with you. Here it is. Nobody actually said it so far. Focus on plays that have very compelling elements or qualities about them. Don't waste your time trading the stocks that are moving without understanding what's driving the price of the stock. In other words, this is what I'm trying to say. Trade strategies, not random patterns. Now you might say, that's your best advice? What the hell is a strategy? What's a strategy? Here's the definition. This is like my way of explaining what it is. Trading strategies means focusing on charts that have certain elements or qualities about them, then looking for then you can zoom down and look for entry patterns as a way to execute that strategy. Does that make sense? What are some strategies, day trading strategies, that you all trade? What are some strategies that you like? Let me know. What do you think? And again, if you're on social media, feel free to participate by leaving a comment, and I'll review the comments in just a little bit. Anybody? What are some what do I mean by strategies? Because here's what happens. Here's what happens all the time. Especially when I do an open house, the stock is like moving. Say, hey, can I buy it? It's moving. Okay, moving is not a strategy. Let's think about, ignore my question about share with me your trading strategies. Ignore that for a minute. What's a strategy? What's the definition of a strategy? In general, if you're a marketing company, wouldn't you have a certain strategy? A sales company or a salesperson. Oh, I'm gonna knock on the door. You're a door-to-door salesman. You knock on. Do you think these door-to-door salesmen don't have strategies? They have sales strategies. If I knock on the door, and the person says, "No, I don't have time," do you think they don't know what they're gonna say to that? Whereas if the person says, you knock on the door and they say, "No, I'm not interested," right? What should you say? That's a strategy. When you're thinking like this, it means you're strategizing. You knock on the door and you're selling life insurance. You're selling life insurance. Oh no, I'm not interested in that product. What would you say if somebody says, "Oh, I'm not interested"? You knock on the door. How about something like, "Oh, I know you're not, because if you were, you'd have called me already." But if I told you that I knew when you were gonna die, and how you can take care of your loved ones in just 5 minutes, would you give me 5 minutes of your time? That's a strategy. That's a pitch. Yeah, it's a sales pitch, but you have to think it in advance. You can't just go knocking on doors. I've never been a door-to-door salesman. Obviously, I don't know anything about it, but I've had people knock on my door, and with these door-to-door salesmen, my Lord, you can't. You want to be, obviously. This is gonna turn on the camera here. With the door-to-door salesman, I've had people knock on my door, and I try to be courteous, and I know they're doing their job. I mean, nobody likes to be knocking on other people's doors. So I try to be nice to them and say, "No, thank you, I'm not interested, but thank you very much." And they start to want to explain a little bit, and you're like, "Oh, geez," but you listen, you give them, the moment you do, this is the problem. If they get their foot in the door, it's not coming out. It just doesn't come out. So that's the problem. So that's why I'm telling you about door-to-door salesmen, because when I used to now I live in a high-rise. Thank God I don't have any door-to-door salesmen. But when I lived on the street, in a house on the street, I did have lots of. I lived close to UC Berkeley, so I had lots of college students knocking on my doors all the time. "Oh, I just want to do this little presentation for you," or this or that. And if you try to be nice and courteous, like we should, then it's very, very hard to get rid of them, unfortunately. So anyways, you gotta have a strategy. You gotta have a strategy always, whatever it is that you're doing. In trading, a strategy to me is not like trying to catch something that's moving. There's million stocks that are moving up and down every day. Not exactly a million, but you get the point. So you have to think in advance what certain things you want to do, you want to focus on. For me, as you know, I focus on gaps a lot. And there is a really good reason why I focus on gaps. So gaps in general is one of my strategies. Is one of the 3 strategies that I do. Okay? So why gaps why do I like gaps so much? Because gaps can move. When the stock gaps, it can move in 5 minutes what it would take normally if it wasn't gapping, what it would take it 10 days. It could move that same amount in 5 minutes or less. So it creates a lot of momentum, a lot of movement. If there's a lot of movement, then I can make potentially a lot of money. That's one. Number two, if you can read what's happening to the gap, to the stock. Like for example, today, why did we short? What was it? BZH. Why did we short BZH today? Why? Why did you see? Was I lying to you when I said, it can move? It took it. Look at this, the whole year, and it almost gave it all back. And this stock, it's not like the stock doesn't move. It already moved about 30% this year. So, and look, in one day, this was the trade this morning, right, that we took. It already negated all of that. So why? Because I understand what was happening. The stock was breaking out. Check it out. Stock was broke out the day before on a spike in volume, on earnings, and people thought this was gonna gap up. So when it gapped down the next day, they were all trapped. Every single person that bought it the previous day, every single person was now trapped. And I'm talking Wall Street people, novice traders, professional traders, big money, small money, every single person. And so today, you wake up, imagine you were in it from the day before, you wake up and you see it's gapping against you. How do you feel? How would you feel? You'd feel, oh my God, let me out. And so they start to get out, it drops. When it drops, the ones that still were hoping, right, that it would go back up, now they're sitting on bigger losses. As some of them start to sell, it drops more. As it drops, the losses are, for the ones that are still holding it, get bigger and bigger. And so it starts that snowball effect, that cycle. Does that make sense? So that's why I like gaps. First, they create big moves like this, huge moves. But also because if you understand the psychology of what the gap does to the chart, to the traders that are in it, then that gives you an advantage, that gives you an edge. And then what else? So movement, the concept of trapped traders, and understanding the what's the psychology of traders that are stuck in it. Liquidity is really good, and then you can also get in right at the open. You don't even have to wait for a pattern to develop later on. So I like gaps, okay? But not all gaps are created equal. There are professional gaps, there are novice gaps. If it's a professional gap like the one I just showed you, I want to play in the direction of the gap. So if it's a gap down, I want to play short. If it's a gap up, I want to play long. If it's a novice gap, these are rare. 90% of all gaps should be professional. 80 to 90% of all gaps, I would say 90. Because I keep them all in a notebook, right? Every day I record the gaps in a notebook and in an Excel spreadsheet. And I know that 90% of gaps are professional. There's only usually just one or two. I don't even have one or two per day on average, novice gaps. So novice gaps are the ones that are exhaustion gaps, where the stock is up a lot. Like if this was to gap, if the, what was it, the BZH. If the BZH had gapped up to here, it would have been a novice gap, short. Okay, a couple days ago we had, I think CMTL was a bit novice. See it? Yesterday. Was down a lot and then gapped down. That's a bit novice. And then from my notebook, CMTL, and then MUR. MUR was also novice. Down a lot and then gapped down. So if it's novice, I'm going to look to play it long. If it's professional, I'm going to look to play it in the direction of the gap, short. Now sometimes we also have, this one. We also have what I call in between. It's not, some of it is novice, part of it is novice, part of it is professional. Maybe the long-term trend is down a lot and that makes it novice, but yesterday was a green bar, made it professional. So part of it is novice, so it's an in-between gap. What I do with these, since they're not really clear, I just don't do them early in the morning. I wait until after the stock settles down and gives me a good indication whether it's going to be long or short. Does Does that make sense? And then I play it based on the intraday pattern that develops after the open, but not at the open, like after 10 o'clock or so. Okay? So professional, novice, and in between. Now that is my strategy. Now how do you execute it? How do you execute it? Well, that's when you come up with patterns, with intraday patterns that you look for. Does that make sense? With intraday patterns that you look for high probability repeating patterns, not something that happens once every in a blue moon. You want something that actually repeats, a pattern that shows up a lot and that has a tendency to work. So that's how you do it. So you have to have a concept, a larger concept, and then a way to execute, to get in it, an entry pattern. So the gap is my strategy. It involves looking for good quality daily charts, gaps on the daily chart, and then zooming down to the intraday timeframes to find high probability repeating patterns. Does that make sense? That's a strategy. That's a strategy. So what are some of your strategies, guys? What are some of your strategies? Anything else you guys got? So gaps is a strategy. What else? Anything else? Let me know. News? Not sure. You could look anything that is repeatable, Bill. That's repeatable, that you can demonstrate a way to make money out of. Sure, you can call it a strategy, trading news. No problem. Yeah, no problem. I don't mind. But yeah, all the gaps usually, I mean, they're the result of news on the stock most of the time, but sometimes on the entire market, sometimes the sector, right? But yeah, news is fine. Breakouts, pullbacks, buy setups, sell setups, those are more patterns. Like, let me ask you this. Let me prove to you why breakouts in general are not strategies. Buy setups, sell setups are not strategies. You know why? Because here, let me show you why. I'm gonna just turn on the charts. Switch to the charts, I mean. So 1 second. You know what I should do is, so how do I do this? I need to go here. And then I need to bring this down. Okay, perfect. So here's the chart. Here's the chart. Let me show you. Let me show you a chart. I'm looking at my chart, thumbnail charts. Like I don't have a pattern for you on, let's say, the BZH, but you know, this is, you know, let's just say this is not a break. I mean, this is a breakout. I know it's not, but let's just say this is actually a breakout. Would I want to play it long? Answer me this. Would I want to play this BZH long as a let's pretend this was a really good base breakout right here, nice base, and then a breakout. It isn't, but let's just play along for a minute. Would I want to play it long? What do you think? If it was a nice base breakout? No, why not? Somebody's saying no. The room is here, so I keep looking to my left, to your right, because I put the room on the side over here. Why would I not want to play it long? Exactly, because it's in a downtrend, but even more important than a downtrend is because it goes against my gap strategy. I have a gap strategy that says if it's a professional gap, I want to play it in the direction of the gap. Does that make sense? So you know, just by focusing on on just that breakout pattern, you're now losing sight of losing track of the big picture. The big picture is really bearish. So a breakout is not really usually a strategy. A pullback is not usually a strategy. If you say something like, what about this? What about this? Check it out. What about this? That's a gap down. And the stock, something like this, BR. The stock is showing me a lot of weakness, and now I do have a breakdown. So you're combining two things here. how would you now I would say that's a strategy. This stock is showing a lot of weakness. It's gapping down today compared to the market. And now it has a sell setup, Bijou. And now it has a sell setup. Okay, I would say that's a strategy. Or it has a breakdown. I would say that's a strategy. So a breakdown combined with a larger concept, or a breakout combined with a larger concept, is good. A breakout in a vacuum is not enough, in my opinion, to call it a strategy. Got it? In my opinion, is not enough. Look at this, by the way. EW is going climactic. Keep an eye on the EW. And then as a long, if you want, Flex might have bottomed. I don't like to play Climbos, the ones that, this is called a gap bury, that buried the gap. But, and then there's a buy setup on IBM. Here's a strategy for you. AD&T. Gap, professional gap, took out resistance, and is basing at the highs. Beautiful. Breakout. That's a strategy. Because now you have a base breakout on a professional gap. The professional gap is the strategy, and the breakout is the entry pattern. Got it? But if you showed me just the stock that is basing without telling me more about it, I'm looking at my charts, without telling me why you would want to be interested in this breakout, then I would call that just a pattern. And my advice was to not chase patterns. Where's the charts? Hold on, where is the charts? Okay, there we go. So AD&T as a breakout could be a strategy, is a strategy. All right, another strategy for me is what I call relative strength, relative weakness. So here's how I discovered my strategies personally. Here's how I did it. In the beginning, now I feel like I'm telling a story. In the beginning, when I read that Market Wizards book written by Jack Schwager, and I also heard him, I attended the talk twice, heard him speak and say that the most important thing is that you have to trade in a way that suits your personality, your own natural personality. So if you're not a patient person in nature, then you can't expect yourself to trade strategies that require a lot of patience. Or if you're whatever, you have to trade in a way that suits you, that makes sense to you, that you agree with, and you absolutely love it. You can't trade something that requires you to do something that's not natural to you, like sitting on hands all day until you finally find that one trade. A lot of people don't have that patience, that discipline. So if they say, but that's what I want to do, is I want to sit on hands all day and watch for that one pattern, guess what? They'll lose that patience and they'll start trading out of boredom. So he said, the most important thing I can tell you is that you have to trade in a way that suits your natural personality. I said, wait a second. Then how do I know what suits me? How do I know what suits my personality? And the first thing I did was I started to list all the things that I was aware of that I could do. I said, let's start at the open. If I were to trade the open, the first 5 minutes of the open or so, what's available to me? What patterns, what ideas, what can I do at the open that makes sense? That not just getting into stuff blindly, that's based on something concrete, that repeats, that happens every day. I said, gaps. Gaps happen every day, and if I get into something at the open in the first 5 minutes, there are no trends in the first. Trends take a little while to develop, to get higher highs and higher lows, or lower highs and lower lows. So if you get into something within the first few minutes at the open, it means you're not really trading the intraday pattern. You're trading more the gap. And so I said, okay, if I want to trade the open, and I wanted to trade the open because that's when the action happened, right? I gotta get to know gaps. So that's when my gap strategy was born. And I realized that there's professional gaps, novice gaps, and there's the in-between gaps. So I created a strategy in my trading plan for professional gaps and for novice gaps and for in-between, but I combined them. I combined it into one strategy. And then I said, okay, at the open, I got it. There's gaps. But what about after the open? like at 10 o'clock, at 11 o'clock, at 1 o'clock. Is there anything else I can do? What should I do? I said, okay, well, there's strong stocks and weak stocks that show like real strength, like AD&T, the one that I just showed you. That's showing real strength, basing at the highs while the market has crashed. So I need to focus on finding stocks that exhibit relative strength to the market and play them long. Stocks that are showing relative weakness and play them short, relative weakness to the market. And so my relative strength RSRW strategy, my second strategy, was born. Now I said, well, how do I play something that's showing relative strength? I realized, wait a second, price can only correct through time by going sideways, in which case you can play the breakout, right? Or stocks can correct through price by pulling back, in which case you can play the buy setup. So now I have a strategy called relative strength, relative weakness, and I have a way to play it also through buy setups, sell setups, which is the same as to say pullbacks, right? And counter rallies short, or breakouts and breakdowns. Does that make sense? So my second strategy was born. And then my brain said, is there anything else? Gaps at the open, RSRW later after the open, like after 10:30 or so, once you have a trend and something really jumps out at you that it's weak compared to the market. What else is there? Is there anything else that one can do? What do you guys think? Is there anything else other than these two items? While you're thinking about it, notice here that I do have breakouts and pullbacks, just like you guys mentioned a few minutes ago, as part of my strategy, but they are not the complete strategy. The strategy is called RSRW. These are the patterns through which I execute my strategy. So breakouts and Lewis and not sure who else mentioned breakouts and breakdowns is part of my strategy too, but it's not in a vacuum. Okay. I realized that there's strong stock, weak stocks, got it. But then there are stocks that are so weak that they become climactic. And stocks usually don't go to zero. It's like a rubber band. You stretch it, and then it snaps back, usually. And so my reversal strategy was born. But I don't do just any reversals. I don't do something that's down a little bit and I expect it to reverse. I look for things that are totally climactic. That's why I said watch that EW, Edwards Life Sciences, because it was starting to look climactic a bit. So my climactic or reversal play strategy was born. And then I said, okay, are all climactics born equal or made equal? No, they're not. There's full climactics, there's mini climactics. I'm not trying to tell you, to explain each of my strategies, because that would take us the whole day probably. To like give you all the detail for all my strategies, but I'm just trying to show you how I went about it, and then I wrote a trading plan around it. I wrote it in a trading plan, wrote a trading plan for each strategy, basically. Does that make sense? And I put it all in one document called the trading plan. So those are 3 strategies. Are there other strategies out there that I'm not aware of that would be viable? I'm sure there are. But those are the 3 strategies that made sense to me in 2007 when I went full-time. And those are the 3 strategies that I still trade to this day. Can you believe it? To this day. Those are the 3 strategies, and that's it. Now, I want to tell you one other thing. I'm not standing up here pretending that every single play that I take has a strategy to it. No. Sometimes I will see something moving and just get in and get out quickly if it doesn't go in my favor. That's not a strategy really. In this case, you'd be just taking advantage of price movement, of rapid price movement. By the way, AD&T is about to break. Yeah, you'd be taking advantage of level 2 maybe, volume, the tape reading. So you could do that, and I do it. I mean, every day I do it, right? Like, What's today? Here's my P&L for today, right? I when I got off the mic, I only did the BZH while on the mic. When I got off the mic, I did X, made $49. It didn't go. COT from Utah made $215. WF, I lost $35. Those are not strategies. The COT was a strategy, but I didn't. It was too late. I think the WWE is looking good, Carol. It's not bad. I like the AD&T the most, I would say. But I think that WWE is not bad. Check the market to make sure you have good timing. I don't have a chart of the market up right now. But you see what I mean? I'm not saying that this was a strategy, but I only got filled half the size. I was supposed to get 3,000 shares. Actually, 3,300 shares. I only got 1,600. So that's a strategy on the BZH. These weren't, the COT was a strategy, but I got it late, so I just jumped in and jumped out quickly. So you can mess around. My advice to you is focus on strategies. Those are the ones that make the most money for you during the day. The other ones, if you want to clip a little bit of this, take advantage a little bit of that other stock, fine. But these are not real strategies. Okay? So let's take a look at the calls this week. What were they? And what kind of strategies were they? Now I'm going to take a look at my calls. Ifan had ABBV. This was a breakout, I think, on a gap. And it didn't work. I mean, that was the first call on Monday. This is Monday. We can look at the chart. So ABBV. Oh, it was a gap. Is that right? ABBV? Probably this day. No, hold on. The 27th. Is that the 27th? Yeah, that's the 27th. So it was a gap up that failed, basically. So the play didn't really work. Okay, my call was AAL short, and notice AAL was cancelled. No trigger. So that's Monday. This is the announcement box. I take a picture of it every single day. It's where we keep our calls. So this was AAL on the 27th. Short play, cancelled, no trigger. And then I called the next one from me was AMAT short. Let's check on the AMAT and see what kind of a play it was. It was a gap down also on the 27th. That's a gap down. It didn't. I said cancel AMAT somewhere here. I don't know where I said it. I don't see it actually. It didn't trigger. Oh, there it is. See it? At 2:31 p.m. I said cancel AMAT. And so I ended up with no plays on Monday. Now, what did I do on Monday? I did one little thing. Do you remember what it was? It was INO. It was already late on Monday, the 27th, this day. It was already late, so I just jumped in for a minute and then jumped right out, and I made like $280 or $250, something like this. That's it. That's all I did on Monday. Didn't do anything else. Ifan had another call, so the ABBV didn't work. TCO. So TCO on Monday, is that Monday? That's Monday, the 27th. See it? Breakdown, I mean a gap down, and then on the 15-minute chart or 5-minute chart, he called it a breakdown. See it? Breakdown on a gap down. Short. I mean, gorgeous. Beautiful. See it? So that was his other trade that day. So that's Monday. Tuesday, do you realize I didn't call that many trades this week, but every single one of them worked that I called? BWA. What was BWA? Remember BWA? It was a gap down on Monday. That's Monday, the 27th. And it was a breakdown or kind of a sell setup. This one. Do you remember it? BWA short. Do you remember it? Now, I'm not trying to review each and every trade. God knows I'm already tired and want to sit down. But I'm just trying to show you what kind of plays I call and what kind of strategies I do. So this was a gap down. Wasn't such a good gap, but it gave us a really good pattern. Short. Here. I did it off the 5. Stop right here. And then here's the play. Okay? So BWA, short, lower stop, whatever. Worked. And then YUMC. I don't remember the YUMC, honestly. YUMC. Oh, I don't remember the YUMC. From me? Oh, long. YUMC. Entry 44.60, stop. A trail to fit for exiting position at 44.73. So that's on Monday. Is that right? On Monday. This is Tuesday. So this day, as a novice gap, I don't remember it. On YUMC. Let's take a look at it. Oh, I messed it up. I do remember the YUMC. This is this play, breakout. Remember it? But I was in a hurry to get off the mic so I can scan the earnings plays because I knew we had a lot. And so I just killed it and I didn't keep an eye on it because after I killed it, it printed a 1, 2, 3. What a beauty. Remember the YUMC? It worked, but I didn't make that much money on it on Monday. Breakout. See how beautiful it was? Beautiful. So that's YUMC on Monday. So I called the YUMC, I called it the BW. And bro, I guess Ifan called it, but I don't want to review it right now. Next day, which was Wednesday, 2 days ago, I called the GE long. GE gapped up. It was actually an earnings play. We were in it the day before earnings, and it gave us a 5-minute buy setup after the open. So am I showing? Oh my God, you guys didn't tell me I'm not showing the chart. So I showed you all these charts, and here it is, BWA. Didn't notice it until now. Here's the BWA. The BWA short a few days ago. I didn't notice that I wasn't showing the charts. Here it is. I showed you the 15-minute a few minutes ago. So here it is. So professional gap, not professional, in between. So the play was a short, under the base, stop above it. And then took most of it at the bottom. Okay? So that's the BWA. Next day we did the next play was the YUMC, but I got out of it too soon. YUMC. Messed it up. I was in a hurry to get off the mic and scan. Look at the beauty. Look at the breakout. Gorgeous. That's the other call that day. 2 calls. That was Tuesday. Monday, no calls. Tuesday, 2 calls. Wednesday, this is Wednesday. No, I'm messing up here. Is that Wednesday? Where's Wednesday? Here's Wednesday. Wednesday, we did the GE long. And that's it, GE. Only 1 call from me. Ifan had the AMD, which was a beauty. Let me show you the chart. So GE, the strategy was a gap and then relative weakness in the afternoon. Correct. So it's a relative weakness on a gap strategy. I mean, on a gap down. So I would just call it relative weakness, RSRW or RWR, RW. So GE was a gap up on Wednesday, and then on the 5-minute, it did give us a buy setup. So that was the call long on GE, and I held the last lot. I took 3 exits on it. One right here at 83 or something, one at the top, and then the last lot was at the end of the day, which was at 96 if I recall correctly. On GE was at 96. The exit, it just hung around until the end of the day, which was 96 was my exit on GE. Now I can, of course, I showed you the P&Ls for my plays every single time, every single day. Of course, what day was that, for example? The 29th or the 30th. So here it is. It made $1,000. GE. I wasn't even done with it yet. It was up $1,000 for the day. Also, it was my only play on what was the day? On the 29th. Is that right? On the 29th. So the BW and the GE. Here's the AMD from Ifan, by the way. It was a professional gap down. And then he shorted the breakdown at the open. I think it was on the 1-minute chart. So I just show you real quick. On the 1 minute. Here or the sell setup. Here it is. The sell setup. I don't know if he did the sell setup honestly or the breakdown. We can look at the post and see. And here's the breakdown. So this was a beauty. From Ifan on Wednesday. All right. Now moving on back to this Thursday, which was yesterday. What did I call? BGG short. But I think I canceled it. Yes, canceled the BGG. DD short. DD was off the 5-minute. Was a 5-minute 1, 2, 3. Let me show you. 5-minute 1, 2, 3. On a professional gap down. See it? Professional breakdown and then a gap on the daily chart. And here's the 1, 2, 3. There it is. 1, 2, 3 and short. It worked. I didn't get out at the bottom. I wish I did, but it worked. That was yesterday, right? This is yesterday. Is that yesterday? No, that's the day before. Oh yeah, that is yesterday. So here it is. That's my PL yesterday. DD. It wasn't, I haven't had any huge days, but every single day is positive. Every single day is positive. So 782 from DD. I did a couple other things. BGG, I called it in the afternoon, didn't go. We killed it because the market skyrocketed. And then I messed around with the SSI. I didn't go anywhere. I messed around with the GE, not a strategy, didn't go anywhere. And then I messed around with the DAR, not a strategy. So these didn't make anything or made very little. For the day, $1,000. Okay, for the day. And then the other, were there any other plays on from me yesterday? So I called the DD short, 1, 2, 3. Facebook I cancelled. Facebook cancelled. BGG cancelled. And then BGG short again in the afternoon. And I called it again at the end of the day. But it didn't go anywhere. We killed it. See, enter 389, exit trail to 388 and 390. So it ended up making actually 11 bucks. Nothing. Today, this is today, a CL long from EFON didn't actually work. It was a professional gap up and then on a pullback or a breakout, I think it didn't work. And BZH, which was, as we said, was exactly like DD a couple days ago. BZH was a professional gap down and a 1, 2, 3 on the 5 minute. See it? And were there a lot of other gaps that I mentioned, a lot of other plays that I mentioned today? Oh yeah, but I tried to focus on the absolute best and call these for you, and I think you wouldn't want it any other way. I don't think you would want it any other way. You want me to call the best ones. The other ones that I mentioned, I mentioned them as ideas, but these are the ones that I called. Notice, not a single loser the entire week. Now, not a lot of plays. I didn't call 5 plays a day. Just 1 or 2 every day, 1 or 2. But not a single losing trade, long or short. I did the GE long, the YUMC long, the BWA short, the BZH short, and the DD short. Okay? Not a single, and then there were like the BGG entered and exited, break even, but not a single one that lost money actually. Any questions? MTR. Okay, I'll switch to the charts right now and we'll take a look at some trades this afternoon because I'm seeing some setups. I mean, it's not like I'm not seeing anything. I do like the AD&T. I'm going to play the AD&T probably. I like the WWE. I like the BR. I like Amgen short. I like the WY short. So there's some plays here, but we need to finish up with the presentation. Any questions about what I discovered, what I talked about so far? Are there any questions about what I talked about so far? BWA was strategy, so relative weakness, like you said. Absolutely. Okay. All right. Okay, great. So this is, remember when we were talking about, I was talking about life earlier and my old job, and I said, somebody said you would have made a great CFO because I was an accountant, right? I said maybe, but I'm not a company guy. I realize that most of our lives is going to be spent working. So from birth to death, maybe the average lifespan in the U.S. is like 85 years or something like this. I think that's what it is, about 87 years, or for women it's higher. But the vast majority of it is spent working, right? And so early on, to tell you the truth, honest to God, from day one, I knew that the money wasn't worth it. This is what I told my buddy of mine, who was actually a classmate of mine, who was starting in the same class, in the same group at KPMG, and I told him it's not worth it. Money, whatever they're giving us, is not worth it. Paying us is not worth it. From day one, I just knew I didn't want to be stuck in a cubicle, right? Working for a company, doing stuff that I didn't really like that much, and having to, like I said this morning, have to dress a certain way, look a certain way, smile a certain way, play office politics, kiss up, kiss ass, all of that stuff. So I decided, you know what, I need to find something that I enjoy, because most of life is going to be spent doing stuff that doing work, and I want to spend, the majority of my life doing something that I enjoy. And that's precisely why I'm a trader today. Not because I couldn't make maybe even more money, or just about the same amount of money doing accounting, doing other professional work. I probably would make just as much, if not more, because by now I'd be a partner at KPMG, and they make a lot of money in big four accounting firms, meaning minimum 1 million a year. So I could probably be making just as much, if not more, than what I do now, what I make now from trading. But at least now I'm at my own house. I mean, I enjoy myself. This is as dressed up as you're ever gonna see me in the house, at least, with a button-down shirt, and that's it. So this is something that I enjoy. I don't have a boss. I can do it from anywhere in the world, pretty much, with the internet, right? So I decided, and this is a puzzle, it's a challenge, it's like a performance sport, a performance game, and I enjoy that. Okay, something that I enjoy. So find out if this is something that you enjoy, and if you do, then you can give it, but you have to give it your all. You have to give it your best shot, okay? You can't be wishy-washy. You can't do it half-heartedly. So if this is something that you enjoy, okay, great. If it's something that you're just doing because you think it's a quick way to make a lot of money, then I'm sorry to say it's probably not gonna work. Probably. Because if you're just doing it for a quick buck, yes, you can do it one time. You can just buy something right now. You can just buy Apple, and you might get lucky. But if you try to do it on a daily basis, day in and day out, on a consistent basis, you're not going to have the same consistency that I just showed you. Every day profitable, every day. Does that make sense? So I don't recommend it to people that are actually just looking to make a quick buck and move on, because most likely they'll lose. This is for somebody who's really serious, who's committed, and who doesn't necessarily want to do the other stuff that requires having to put up with bad people, with bad bosses, doing stuff that you don't actually enjoy at all. So that's what trading is. Now, in conclusion, I just want to say this is what also the strategic day trader is about. Is we're a community of traders with like-minded people on the same mission. We're all looking to find the same kind of patterns, the strategies that I just showed you, gaps, relative strength, relative weakness, climactics, and we're all looking for the same stuff. So surround yourself with those on the same mission as you, and I invite you to give it a try and see if it's something that you like. I hope through the open house this week that you really found out what the strategic day trader is all about, and that you enjoyed it. If not, wish you all the best still. I don't feel any, if you say I tried it, it's not for me, then great. Find something that actually resonates with you, that works for you. There are some other rooms that trade other things, news, that do options, that do a lot of scalps, that do other things that I don't necessarily do. No problem. Find something that suits you. But I just hope that in the course of over the last 5 days that I was able to demonstrate to you what the room is about, and that you enjoyed it. And if you did, I hope you'll join us. All right. If you have any questions, make sure to reach out to info@t3live.com, info@t3live.com, or just give them a call, 888-998-3548. Thanks so much, and I will talk to you later. Now we're going to switch over to real charts and see what we can find this afternoon. We did one trade this morning, the BZH. Hopefully we can find something to do this afternoon, because I'm seeing a lot of setups. So for those watching on social media, I'll talk to you guys later. Take care. Have a great weekend.